Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq, with daily insight on the Nasdaq-100 index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed on Nasdaq. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining me this Tuesday afternoon, we have Shawn, Cruz, manager of trader services at TD Ameritrade. We're going to talk about fresh levels of the Nasdaq-100, VOLQ, and of course, preview some earnings tonight. Shawn, it's great to see you as always. Let's take a look at Nasdaq-100 levels.
Yeah, I mean, it's been interesting just to see some of the wide ranges that Nasdaq's traded in, not only just over the course of a month or weeks or days, but even if you look intraday at a lot of the candles that you see here, the longer the candle, that represents a larger intraday range. But if you're looking at what we've seen for the past couple of days, that looks to be like it's tightening and consolidating. And we actually talked about some levels last week. On the upside, it is trading right at that level, maybe even just above that level that we were looking at for the upside to see if we could get a breakout. Rather than getting above that level and breaking out, it got above that level and started to consolidate here again. But I do think it sort of lines up with some previous price levels that we have seen over the past month or so. And so I'm really looking at 13,778, somewhere in there. And then also on the downside, looking at 13,653. Those are really the two price levels I'm looking at. I think if we look and see where the index can go on the upside, I think if you do get a breakout, it won't be, I think, as sort of a large gap higher. I think it'll break out and maybe trend higher up towards some of those previous highs. The thing is, if it breaks lower, that's where I'm interested to see what sort of gaps we may see on the downside, because that's where you get into that range where those candles are pretty long. There's a lot of intraday volatility. And that's something I'm going to be focused on. And if you look today, if you look at the heat map, it's just, there's really not much there if you're a bull or a bear. This is sort of what a consolidating market looks like, where you just don't have a lot of bright red or a lot of bright green anywhere on the screen. Just a little bit of a mixed trading here. I think this is consolidation. If you look at VOLQ, that's sort of the next place I would go if I wanted to look and see where we're at. We're still below that all-important 19 level, but we are barely staying below that level. I think it'll be interesting to see if we maybe push lower into fresh lows that we haven't really seen, or if we do break out higher, if there is some sort of a jump in volatility or something kind of comes in and upsets the cart here. And that's why I say I'm more interested to see what happens if we break higher. Is there just going to be sort of this grind higher, versus if we do break lower, is that going to cause VOLQ to pop higher? We're going to see some larger intraday ranges on the top of that as the market gets a little bit more variable.
All right, let's talk about Zoom earnings after the close.
Yeah, so Zoom is one of those companies that is certainly the star, one of the main stars of the stay-at-home trade last year. And the question now becomes, what are you going to do as things start to normalize? You probably had, when you were going out there and sort of, pitching your business to investors, saying, look, we're going to be growing users for the next 3 to 5 years. You probably got a lot of that growth you were targeting in 1 year. So the question now becomes, is management going to have to maybe pivot on strategy to go from growing that user base to how they monetize? Is that something investors are going to want a little bit more clarity on? And also, how are they starting to see user activity, user engagements here a year in? Is it going to be something where there's a lot of pull through and that's starting to fade a little bit, or they're finding ways to keep them on the platform? And once again, they're looking into monetization. So I really think the details are going to be important here, really around that user base, profitability, revenue growth, and the outlook. If you look at the price levels, it's pricing in about a $23 move in either direction. And that puts you almost at an interesting support level on the downside, right around 305. And then it also puts you at another interesting price level that we hadn't seen since earlier back in February, right up around 350. So 305, 350 are going to be the sort of the range to see us trade in between. If they do come out with something that is significantly moves the needle fundamentally, either on the positive or the negative side, that can be something to look at. I think that will come from forward guidance on what they're expecting moving forward.
All right, Shawn, appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq.